Hi, this is New to the Street Leadership. I'm Jane King.
I'm Matt Doherty. Each month on New to the Street Leadership, powered by Sector Spider ETFs, we will focus on the leadership journey of our guests and what they learned along the way. We will talk to amazing leaders in both the private and public sectors.
We'll dig deep and we'll speak to accomplished business leaders and discuss how a leadership platform is essential to meet goals and inspire others.
It's brought to you monthly by Sector Spider ETFs. Let's talk leadership.
You could buy a single stock and go all in on one company, or own the sector and invest in keeping good company. Is it so radical to be so rational? Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for a prospectus containing this information. Read it carefully. Sector Spiders, the 11 sectors of the S&P 500.
Sam Reese is CEO of Vistage, the world's largest CEO coaching and peer advisory organization for small and medium-sized businesses. Over his 35-year career as a business leader, Sam has led large and mid-sized organizations and has advised CEOs and key executives of companies all over the world. And as always, Matt Doherty is with me, and Matt is a Vistage chair in the Charlotte market. So welcome, both of you.
Thank you very much, Jane. Sam, thank you for being on the show. For those of listening and watching that don't know what Vistage is, please explain to the audience what Vistage is and who are its members.
I'd love to. Thanks. And thanks for having me. Vistage is world's largest CEO coaching organization. For us, what we really do is we focus on small and mid-sized businesses. We really see those as the heroes of the world when it comes to creating jobs and building communities. We take a little bit different approach. When I say we're the world's largest CEO and coaching organization, what we do is we have this all focused on a peer advisory model. So we find great leaders like Matt, for example, to be the chairmen and chairwomen of these groups, bring a bunch of, call it 10 to 15 CEOs together. They meet on a regular basis, share in a confidential setting, help each other with their most difficult problems, all led by an experienced chairman or chairwoman who makes these conversations really impactful. And we think that's the best way leaders actually learn. I always joke by saying, even if Bill Gates was your coach and you got to spend every month with him, after about month 3 or 4, you'd go, didn't he say that last time? And did he forget my last name? So it's a really different model where we really help each other out.
How many members are there? It's an international organization. How many members do you have worldwide?
So 45,000 members in 35 countries. I'm just returning actually 2 nights ago from Copenhagen and London. We've got great business over there as well. So it's really incredible to see how the business has expanded and to see how this concept of CEO coaching and executive coaching with a peer advisory model, to see how that works and translates anywhere from the US to China to Australia to Copenhagen to Germany to Argentina. We have really a lot of success around the globe with these small and mid-sized leaders.
Yeah. How does somebody become a member?
Great question. Well, first of all, we have a terrific website that provides all sorts of information for leaders, even if they never become members, but that's a great place to connect with us. And then we have over the globe, 1,200 plus chairmen and chairwomen that run these groups. And so they're actively recruiting members that could fit their groups at all times. So they're the people that we have this is a very special group. As I say, they're almost, all former CEOs and key executives, great leaders that are building their own groups and really trying to create the right type of group DNA that they feel makes the most sense.
Yeah, with my background as a basketball coach, it fits right in because you recruit to your core values, you recruit to your culture, you recruit the type of person that you think can contribute and make the team better and add value. So it is an extension of being a college basketball coach. I just don't have to deal with the parents.
We have a few, don't we? We're really fortunate to have a few big time coaches like you. We got another chairwoman out on the West Coast who's just terrific. Was an NAIA all Hall of Fame coach. We got a few because it is a great background for that. Great leaders.
The origin of Vistage. I love history and I love the origin. How did Vistage get started?
You know, it's been 65 plus years. And so look back in 1957, there's a guy named Bob Nurse, great guy that was sort of a failed consultant. He tried all sorts of businesses, none of them worked. And then one day he just said, hey, I'm going to call all these people that I've tried to sell stuff to and just get him around the table for a meeting and see if maybe they could help each other because they seem to have the same issues. So it was sort of a home run. And eventually they started to pay him. You know, he wasn't even sure he'd make any money from it. But I always like to tell the very first issue that was ever processed, because it really shows you how things haven't changed. 65 plus years ago, the first issue is one of the members says, you know, they're not even members, and it's just a group of 7 people, who says, you know, my biggest problem is I can't find a good sales manager. Can anyone help me? One of the other members says, I have some really good advice, but you're not going to like it because I have the best sales manager in the world, and he was somebody that you fired. And the point was, maybe it's not the sales manager that's the problem. Maybe it's you as the leader that's the problem. And I know leaders like Matt often see it's the leaders they're working with that we end up being the problem. Sometimes we don't see it.
Yeah. No, that's terrific. Jane, go ahead.
Well, I was just going to ask about your personal journey. Like, what was your leadership like running organizations? What would you say differentiates a great CEO from kind of a mediocre CEO?
Well, I think I don't know if I've ever gotten to great. I'm saying I'm always improving, but when I think about it, I think about my journey from being a really bad CEO to hopefully being one that, you know, continues to get better. But I think there's a lot of things that differentiate it. But I think it starts with, you know, a belief that other people can help you do the job. It's not just a one man or one woman job, and you don't have some all powerful, all knowing knowledge where you can make all the decisions. You got to trust other people, and you got to have this environment of trust. It also, like what I find what separates the best CEOs too, is that you have a picture of where you want to go and a vision for that. And so all your decisions connect to that foundation, rather than new CEOs often just make decisions one at a time. And then they find a point where it's just irreconcilable. All their decisions don't add up and they got all these problems. So the best CEOs have that perspective, and you just see them. You know, we see them every day. The best CEOs in the world are humble, they're vulnerable, they know that they aren't perfect, they know they make mistakes, and they believe in people. I know that may sound, you know, a little trite, but that's really the truth.
That you just described delegation, trusting, vision, which are all soft skills, right? And I like to say soft skills lead to hard cash. In a world today where they want to measure everything, right? How do you put a metric, or can you put a metric on the soft skills?
Great question. I think, you know, you got to perform. So when I look at it, I talk to boards about this all the time, as well as, you know, I might do things a little bit differently. I might see some metrics I think are valuable, some that aren't valuable. At the end of the day, I want to be responsible for results. And that's what I think the best CEOs do. But what I see CEOs doing more right now for that metric is everybody's talking about, what does it take to retain the best people? So you can have a million things going on. If I can't keep the best people, all those metrics don't mean anything. There's one metric I would say that we all have to follow, is the ability to retain our top performers. That's what makes our businesses run.
Yeah, that's the key metric of soft skills.
Yeah. It is, and it's a hard one, right? It's a hard one but I think it's improved that we as leaders see that that's important now, where we used to kind of think that people were more, you know, we could fill in the boxes. If this person didn't work, we bring in another one. People don't think that anymore. The war for talent is too big.
That's right.
That's really interesting. And I do love the soft skills. That human connection is still so important, even with all the data crunching and AI and everything we're going to have. It still makes a difference to, you know, have a human connection with somebody. And there was something too about embracing the weeds. Explain that.
Yeah, it's one of the things I know sometimes people don't agree with me on this concept, but I find that leaders that think, you know, when I ask what their role is, and they'll say things like, you know, I'm just a professional leader, I don't need to understand the business. That doesn't work anymore. You have to understand the detail of the business. You have to. And I find that the old days where people thought they were portable, you know, I'm great at this company, just hire me, I can go run the next company. You can't. You got to understand the business, not only to make great decisions, but have credibility with your people. And the best way you understand it, the shortcut, is to ask a lot of questions instead of think you have a lot of answers. Ask a lot of questions. But I think you really do have to embrace that. And that the hard part is that sometimes it takes you a little while to get up to speed as a CEO. When I've been the CEO here for 8 years, and I remember the first 6 months, my son called and said, "How's it going?" I said, I'm still sort of an empty suit. I really don't have much to offer yet, but I'm getting close, right? About after 6 months, I started to be able to understand it.
How valuable was that experience as an athlete, getting you through navigating the course of being a CEO at Miller Heiman, now at Vistage?
It's funny, like even just last night, as I thought about our conversation, I couldn't sleep because I went back to 1982. I can't help it, and just how it feels like yesterday when all that ended. And I think where it helped me is I just thought that life was over then. Like, there's no way. That's the only thing I wanted to do. So now what do I do in life? It's disappointing. And that's what I see now is I see obstacles differently, right? And I've learned that thing I said to myself was just a story, just a story in my head that, once I can't be an Olympic runner, I'm nobody. Well, that's just a story. And so I find it just makes me much more measured on the decisions I make, much more open to listen to other people's perspective, and much more, even keel rather than up and down, right? You got to get up, then you're down. So I try and keep it at that level. And I think it allows me to counsel people in the same way. When it seems like the world is ending, you're like, not yet. Like, there's still some good hope on the horizon.
How do you start your day? I know a lot of great leaders, work out, pray, journal. What does Sam Reese do?
Well, I'm boring, so I do the same thing every flipping morning. And just when I was an athlete, I did the same thing pretty much every morning and all day and all night. My sons that were athletes finally learned why I was so boring. But I do the same thing. I wake up in the morning, and mine's more about reading scripture, just trying to get close to the things that I know are important to me to make sure I make the best decisions in the day. And then my workouts are at night. I used to be able to work out in the morning. At 62, I now do it at night, but I have to get a workout in every single day as well. But it starts with getting grounded in some scripture.
I love it. That was awesome. Jane?
Well, thank you so much, Sam. And it's so interesting. Thank you for your insights into this. Matt, always great to be with you today.
Likewise.
Thanks.
Thanks for having me. It was really nice to spend time with you.
When a market shift is around the corner, invest in an entire sector and get ahead of the curve. Is it so radical to be so rational? Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for a prospectus containing this information. Read it carefully. Sector Spiders, the 11 sectors of the S&P 500.
York is the global head of Goldman Sachs Wealth Management. He is a member of the management committee and began his career covering clients in New York and continues in that capacity today. Mr. York joined Goldman Sachs in 1986 in New York as a private wealth advisor. He was named managing director in 1996 and partner in 2000 and is a proud alum of the University of North Carolina, as is my co-host, Matt Doherty. And great to have you both here.
Go
today.
Heels.
Go Heels.
I'm a Purdue grad, so I'm just over here.
That's okay. That's okay. We respect Purdue.
Always happy to talk about basketball.
Yeah, that's right. But on this show, we're going to talk leadership. Okay. And Tucker, you've been at Goldman. My brother works for you at Goldman Sachs, my brother John, since 1986, the premier world leader in investment banking. What changes have you seen as you've gone from a wealth manager to now a director, managing director at the firm?
Thanks, Matt. That's generous comments about Goldman Sachs. By the way, I still am a wealth manager, and I think, especially as we talk about leadership, I think it's the practicing, the continuing the practice is an important part of things. But I'm very fortunate. I feel very fortunate that I've been at the same place, literally since I got out of business school. And I will tell you that was not the plan. Mm-hmm. That was not the plan. And I've seen a lot of changes, but if you think about 37 years, there's been a lot of changes everywhere. And the firm has actually been around since 1869.
Wow.
And so I think like any entity, organization, certainly a for-profit company, to be around that long, part of it is, frankly, the ability to not only deal with change, but I would argue embrace change and sort that out for the future.
Talk about change. We see different generations come in. We're in our 60s.
We are?
Yeah, news alert.
Yes.
You notice I said 60, so it could
Thank
be
you.
61 or 69. I think
Let's
we're
do that
both
for a
on the
while.
lower end.
Yeah.
How do you stay current, especially in attracting talent? Because at the end of the day, we need talent on our teams, whether you're in sports or business. How do you stay current in attracting good talent and retaining good talent?
Yeah, and I think that question was the same 35 years ago. There's the answers are different to it, meaning the essential part of that. I think we are absolutely, as a service business, people business, we're in the talent management business, and making sure that not only do you get the best people, it's do you retain the best people over the long term. I mean, you mentioned your brother. He's been with us only 23 years. That's an amazing number. If you think about corporate America, to have people around that long, and we have well over 500 people that have been there more than a quarter century. I'm in the quarter century club. And so I think basically people want to be a valued member of a winning team. At the end of the day, that's really what people want. That's what I want. And I think the more you kind of approach it from that lens, while you're still making sure that it works for all the other important constituencies, shareholders, very important, clients, business. We don't have clients, we have nothing else. And so putting that all together, I think, that's if you will the mixture we're trying to keep correct.
And I'm just curious too, like how, because Goldman has really been at the top of the game through all of this. So how do you manage that change? How do you stay competitive? And especially through some of these events we've had COVID, we've had 9/11. I mean, what's kind of the Goldman philosophy up there?
Yeah, I think, and we could go on to the global financial crisis. We could go back to the '87 market crash, which happened in my first full year. I mean, stuff is going to happen. You can't predict when, but you can predict that stuff will happen. And I think it's basically, for us, we practice a lot of broad concepts around risk management. And so while there's all kinds of projections about the good things that can happen, I would say we obsess about the bad things that could happen and make sure that we're prepared in these circumstances what would happen. So you mentioned 9/11, which from a pure market perspective, arguably was not predictable, could from a political perspective. And yet, after that happened, our clients did not sell stocks. Now, a lot of stocks were sold, and I'm talking about on a net basis. But to me, I was very proud of that because it meant that our people had been in dialogue before these events to say, stocks are risky, stocks could go down. If you are overweighted in those, we should review that. And by the way, same thing happened in March of 2020 for COVID. It was the exact same thing. All of a sudden it was there, markets went way down, and on an aggregate basis, we had been in dialogues with clients so that they stayed the course, which of course ultimately was the right thing.
A lot of people listening, watching, run small to mid-sized companies. You, big scale at Goldman, worldwide, international. How do you plan for crisis, and what is the process? Like, do you meet? How do you manage it? And then how do you communicate to your team? What advice would you give a small to mid-sized Company to, be like, 9/11 could happen, COVID could happen. How do you communicate that to the team?
I feel like I started at a small company because there were, I think, 5,000 people when I started. It's much bigger today. And so I probably have lost a bit of that perspective, even though I still feel like we're small. But what has been very helpful for me from running a business, but being part of Goldman, is that we have a relatively small number of people whose job it is to think about these things,
Right.
which allows for most of the rest of us to be able to be focused totally on clients.
And stay positive.
And stay positive, but also be present.
Right.
Because when this stuff is happening, that's when the clients need to speak to you.
Yep.
And if you're spending the time, oh, you know what, I don't have power over here, I have to figure out how to get power, or we have to figure out how to get our people out of harm's way, whatever it is, then that's going to take away from that approach. So I think it's kind of like any team, different people have their jobs to do, and it's being clear during times when it's not stressful to say, okay, what are the jobs, who's responsible, and then how do we think about things?
One common theme I hear from you and some of the other people that we've talked to on this show is think about the client or the customer. And that's really your focus. And I think that's, what makes a successful business is to constantly think about that, making sure their needs are met, communication. Yeah. How would you describe that relationship?
No, it's waking up in the morning thinking about the client. And you can take that too far because there's other important things in life. I don't discount that. But the notion that we don't have anything if we don't have the clients. Mm-hmm. You just have to kind of start with that. Although, Jane, I think about this a lot. I really do think there's three stools to our business, and I spend a lot of time on making sure that those are cared for evenly, such that you're not overweighting one because it'll come to the detriment of the other two. So it's the clients first and foremost. As I said, there's no question about that. But it's also the people. And I actually think of our people as clients, a derivative of that as clients. Yes. Because guess what? If the people leave, and our business is about long-term relationships, people don't like that when that's disrupted for whatever reason. And so when people leave, clients don't like that, which means I'm in trouble on that. And so making sure you have the right people, and I think about a lot of things, but low turnover is one of them, because that's the manifestation of people are happy, satisfied, feel fulfilled in what they do. And then the third thing is shareholders. If the enterprise is clients are happy, people are happy, but it doesn't generate a profitability where people want to continue to sustain that model, and the whole thing doesn't work. And so all of these things I think are important and need to be in the kind of right kind of balance for long-term sustainability.
Yeah.
Well, that kind of leads into, I was curious about just how do you manage the stress? I mean, I can imagine, dealing with a lot of money. Wall Street is a famously stressful place. Yeah. How do you deal with that? How do you balance all of that in your life and stay sane through all your years at Goldman?
Well, thank you. That presumes that I am sane. When you asked the question, the first response I was thinking of is just decide not to be stressed. Decide, no stress. And yet, I think that's really important. As much as possible to kind of know where you are am I at a 7 right now? Because I really need to be at a 4. Mm-hmm. And if so, why am I at a 7? What's really the thing that's going on that's bugging me, and how can I attack that? Markets going up and down for whatever, and it might be just literally that the 87 market crash happened when I just got out of the training program, and it was crazy, but as someone said to me, well, the good news is you don't have any money, so you couldn't have lost any. That was true. So what's the bad news? He said, well, the bad news is the industry is over, so you won't have a job. Fortunately, the latter didn't turn out to be the case. But I think market stress is something that I've been kind of okay with. It's much more the people stress. By the way, our people in our lives and family outside and things like that, and managing those. But I think it's being very alert to where it is on that, and then say, what are the things I can do? And markets go down, and there's not a lot you can do.
Well, and you mentioned the risk management. So I think that's a big part of kind of controlling that stress. Just real quick follow-up. Do you find you handle stress better as your career went on?
Yes.
Okay.
Yeah. I think it's a little bit like taking risk. And if you are educated about the risk, you will ultimately be comfortable with taking more of it than would otherwise be the case. And I do believe, and markets show you, that there's a risk-reward element, i.e. over time, and especially if you stretch it out 5 years, 10 years, but what about 30 years in investment horizons? Stocks, arguably, Warren Buffett would say, stocks in the long run are not risky. Cash is risky because you'll lose from inflation, and the reverse is true for the short run. So I think as you gain in years and experience, you do have a broader perspective of things, and you're able to kind of look at things more from that approach. I've seen this before, I've done this, whatever. It ultimately worked out. And because I saw this before, and because I saw the '87 market crash, I always made sure I had some amount of cash. Okay. I think these are the things that allow you to be more thoughtful, because you know ultimately this will end. And yet, in your gut, be able to kind of live with the anxiety of the current moment.
Thank you so much, Tucker.
Yeah,
Tucker, thanks.
So interesting.
Thank you, guys. It's great to be with you. I really appreciate what you're doing, and thanks for having me.
Yeah, appreciate it.
There are many ways to buy the S&P 500, but only one way allows you to own the sectors you like best. Sector Spider ETFs. Is it so radical to be so rational? Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for a prospectus containing this information. Read it carefully. Sector Spiders, the 11 sectors of the S&P 500.